In the super competitive world of high-end retail, a kingdom has just crumbled. And that's left a massive power vacuum, with a huge prize right there for the taking. This is the story of a battle for the heart and the wallet of the luxury shopper. It's a fight for a staggering amount of money, and maybe a lesson in what happens when a business completely forgets who it's for. Let's break it all down. So our story really kicks off with the collapse of an empire. When a giant like Saks Global stumbles, it doesn't just fall. It creates an earthquake. And in that aftershock, a massive opportunity opens up for anyone who's quick enough and smart enough to grab it. And this is the size of that opportunity. $700 million. That's the amount of market share analysts figure is now totally up for grabs since Saks Global went bankrupt. I mean, that's a colossal amount of money from very loyal luxury customers who all of a sudden are looking for a new place to shop. And here it is, the fallen giant. For decades, Saks Fifth Avenue was the name in luxury, the absolute pinnacle. But behind those iconic doors, a huge crisis was brewing, one that would eventually lead to a bankruptcy that's thrown the entire luxury world into chaos. This perspective from Tom Ott, a guy who was at Saks for 24 years, says it all. He's basically confirming what the numbers are telling us. As Saks sputters, the race is officially on to grab its customers. So who are the main contenders in this race? All right, let's meet the two main rivals who are ready to claim the throne, Nordstrom and Bloomingdale's. Now, both of these are big, established names, but they've been playing a very, very different game than Saks lately, and boy, does it show. And wow, the numbers really tell a stark story. Check this out. In the second quarter of 2025, while Saks sales just plummeted by 16%, Nordstrom grew by 10%, and Bloomingdale's shot up by 13%. That's not just a gap, it's a chasm. One was sinking while the others were absolutely soaring. So the big question is, where is that $700 million gonna go? Well, this chart gives us a pretty good idea. Nordstrom has the biggest customer overlap at 25%, which means a quarter of Saks shoppers already shop there, and Bloomingdale's is right on their heels at 22%. So this isn't some random scramble. It's a direct head-to-head battle for a very specific, high-spending customer. And you can see both Nordstrom and Bloomingdale's have these really strong brand identities that luxury shoppers already know and love. They aren't just sitting around waiting for customers to fall into their laps. Nope, they are actively, strategically positioned to win them over. So what's Nordstrom's secret sauce? Well, CEO Lindsay Namiashe calls their strategy being the Apple of retailing. And what does that mean? It means creating a bright, elevated, and just seamless experience for the customer. It's all about exceptional service, and it's driven by leaders who still think like merchants. People who live and breathe the product and the customer, not just the numbers on a balance sheet. And then you've got Bloomingdale's, which is powered by this guy, Tony Spring, the CEO of its parent company, Macy's. He's described as a great merchant and a great leader who basically turned the entire ship around in just a year. It just goes to show you how critical strong, retail-focused leadership really is. And the results? They speak for themselves. 5 straight quarters of growth. Think about that. While everyone else was struggling, Bloomingdale's was building this undeniable momentum, quarter after quarter. That kind of consistency makes them a really formidable contender for that luxury crown. Okay, so to really understand why Nordstrom and Bloomingdale's are winning, we have to understand exactly why Saks lost. I mean, how does a retail titan with such an iconic brand end up in bankruptcy? Let's take a look at the anatomy of this downfall. When you boil it all down, it comes to 3 critical mistakes. First, they pushed away their most important partners, the brands themselves. Second, they completely neglected the physical experience inside their stores. And third, they fell into the classic trap of prioritizing real estate over actual retail. So this first mistake was all about something called vendor chargebacks. Basically, what started as small fees for little shipping errors reportedly turned into a core part of Saks's revenue strategy. This squeezed brands, especially the smaller ones, and forced them to pull back. And the result? Way fewer products on the shelves for you, the customer. The second mistake, well, it was obvious to anyone who actually walked into a store. A former style advisor even called the stores shabby. Broken fixtures, a feeling of neglect. The place just didn't scream luxury anymore. And if the store doesn't look the part, Why would customers believe the brand is still special? And that third mistake was a huge strategic error. So Macy's leadership famously said no to a multi-billion-dollar takeover from real estate investors who just wanted to cash in on their properties. Saks, on the other hand, went right down that path, focusing more on the value of their buildings instead of the value of their relationships with customers. Okay, so that was the past, but what about the future? With Saks now in bankruptcy and with new leadership, it's at a major crossroads. There are basically three potential paths forward, and they range from a slow, painful fade to a radical reinvention. So, with the company in bankruptcy, what happens now? Does this iconic name just disappear? Does it get reborn? Or does it get broken up for parts? There are really three main scenarios on the table. On one hand, you've got the slow fade path. This is where they do some financial restructuring, close a few stores, but don't really fix the core problems. The huge risk here is they become another Sears-style cautionary tale. Then, on the other hand, there's the merchant's return, a path that means radically simplifying the business, focusing on new and exciting brands, and putting the customer, not the real estate, back at the center of everything. And then there's the most dramatic scenario of all, the breakup. In this future, the company sells off its most valuable assets, like the legendary Bergdorf Goodman, which alone could be worth up to $2 billion. This would literally mean the end of the Saks empire as we know it. So after looking at the rise of the challengers, the fall of the giant, and all its possible futures, there's one incredibly powerful, overarching lesson that comes out of this whole saga. And this is it. People love to say the department store is dead, but this story proves that's just not true. What's dead is the disconnected retailer, the one that loses touch with its brands, its stores, and most importantly, its customers. The throne hasn't vanished. It's just being taken by someone else. Retail expert Bob Phibbs just captures the moral of the story perfectly with this quote. It highlights the core problem. Retail is supposed to be about passion and product and people. When you trade that merchant's soul for a real estate play, you lose the magic. And at the end of the day, you lose the customer. Which really leaves us with one last thought. In a business world that's so driven by spreadsheets and financial engineering, maybe the most powerful, the most disruptive, and the most profitable strategy of all is also the simplest one. To never, ever forget who you're in business to serve. Makes you think, right?